Hello, welcome. I'm Carly and welcome to this grocery training module on financial concepts. This is one of a 10-part series. Big thank you to my partner on the grocery training series, the North Central Regional Planning Commission, for making this video training series possible. This module, like the others, contains several supporting documents as well as a concepts document that we'll be using to go through the rest of this video. But those documents are intended to stand on their own, so if you do want to go ahead and pull them up, jump straight ahead and get there, that is totally your call. Otherwise, stick with me and we'll go through the concepts document. Within this document, we'll be flashing to each of the other templates that are included, as well as going through the 5 different categories on this document. They are business and banking setup, taxes and statements, pricing strategy, employees, and cash management. The first section we'll go through is the business and banking setup. So to get us started in this category and really this module overall, I want to stress the importance that there are a couple of key partnerships that you will form to help ensure that everything is as it should be. Those key partnerships are your accountant/payroll specialist, those may or may not be the same person, your banker, essentially, and your bookkeeper. So these individuals are going to ensure the financial health of your business, and very important to have clear responsibilities outlined between these parties to make sure none of the things that we're going to cover in this module are slipping through the cracks. So first thing, when you very first start building a grocery store, this would be in the very early stages, like if you remember back to the project management module, where we're making the business plan. We're not even necessarily doing any physical work on the project yet, and this is that same time frame for the financial side of your project. These are the things that you're going to be making alongside your business plan, and together the business plan plus these financial estimations are the best you can do before you've started. Those are the documents that you'll use to secure the funding that you need or get other people to buy into the business, however you're going about getting the cash that you need to actually do the project. So this first template that I've designed for you is intended to serve as kind of a walkthrough checklist on your project. So on ours, we started with a building that was standing, that used to be a grocery store, had been retrofitted back into just a regular building, and there was a lot that needed done around upgrading the electrical, installing the plumbing into the floor that would be needed to catch the drips from the refrigeration units, all kinds of different things that needed to happen, along with the roof leaked, the front awning was falling apart. There were actual structural things within the building that needed done. So you'll see on this inventory checklist, it covers kind of all of that. It's covering the building remodel itself. It's covering the equipment purchases that you'll likely need to do the operations that you have in mind. And then also the technology, kind of starting to bring in some of those pieces, which in some cases will result in building remodel pieces that need done. So this is intended to kind of walk through the space and see what all is included in the project from a cost standpoint. And you'll see there's a quotes to get column on this template. That's really like the initial column that you'll use is, yes, this needs done. I need to get with somebody to see what is this going to cost us. And at the end of all of that, you have a quoted price on everything, and that's how you're putting together the actual budget that you're shooting for as you begin implementing your project. So this next template is the grocery financial analysis, and mind you, you have no real data to put into this template, but the categories are there, and notice the tabs at the bottom of the spreadsheet template. There are lots of different categories that may be applicable depending on the operations that you have in mind, and that's really the main thing to focus on, is making sure that you're including all of the right categories. And then the estimates, you really want to do multiple scenarios. So what if your expenses were really high, or your expenses were really low versus your revenues really high, your revenues lower? So putting all of those different things together gets you the multiple scenarios of kind of what is your break-even point as far as your weekly sales go, aka is this a viable option given what you're estimating your weekly sales will be compared to what you estimate your weekly expenses will be. Is there room to make a debt payment? Is there room to actually make money off of this endeavor? And last but not least, you'll want to put together a projected balance sheet. So this is for your business overall. And you'll see, again, these are mostly estimates depending on how early you're doing it, but you could add columns as more of the information becomes set in stone where it is figured out. But you'll see, based on all of the quotes and all of the estimates that you've put together so far, putting all of that together into assets and liabilities and trying to figure out how much money do I even need to do this project in total based on here's the money that I have so far, here's the total cost that I estimate, and there's some amount of gap that you need additional funding to fill. Next, we'll talk about the bank account setup and configuration. So this is just one way of doing it. There's a lot of different options as far as what's going to make the most sense for your business, your store. But the way that this is outlined, I'll explain our logic, and at least then you can take the bits and pieces that work for you and update the rest. So the first main account is your checking account. And I say main account because in our store, we run everything through the checking account. And then from there, we may take and move money elsewhere into the savings accounts that we'll get into. But that checking account is a central hub that is receiving our daily credit card deposits, also receiving any of the cash bank deposits that we make throughout the week. It's where we withdraw the cash for the bank bags, and it's where the EFT payments hit for any of our vendors who are being paid that way. That main checking account is really at the center of your bank account configuration. And then from there, however fancy you want to get around the sides and the edges of all of that, that's really up to you based on your unique business structure. The savings accounts that we choose to use are based on our large monthly expenses. So in our situation, we did have a debt payment. So that is one large expense that is there every single month. And the other is sales tax, where you're taking in sales tax money every single day that you're open for business. And once a month, you're reporting your total sales and paying in the sales tax from that sales period. So those are large payments that happen infrequently, and because of that, we like to take money even a couple times a week out of the checking account and pay it to those savings accounts so that those payments aren't sneaking up on us. I would say if you have other large expenses, have a similar savings account for that as well. Next, I highly encourage a rewards credit card, especially for things where you're going to be paying for that anyway. We have a Visa rewards credit card that when we surveyed the market as far as what rewards business credit cards were available, that was the one that worked best for us. It's a Visa Spark card, I believe. But you may find one that fits better with the types of rewards that you're looking for. Like, for example, if you travel a lot with your business, maybe a rewards card that pays you in airline miles is totally cool. With a grocery store, you don't go anywhere. You're doing your grocery store. So a rewards card that pays you in miles is not near as cool as one that will pay you in dollars. So yeah, you got to look and see what makes the most sense for your situation. And last but not least, so QuickBooks tasks. These are the things that you will have to manually do in QuickBooks. Hopefully there is a data transfer set up from your bank to your QuickBooks with your checking account. So that central account where everything is happening, if you export that account back into your QuickBooks, then these are the manual tasks that you may need to do. The main one is categorize the expenses. And we do this so that we can very easily pull data out of QuickBooks to say, this is the money that we spent on advertising. This is the money that we spent on cost of goods sold. And by categorizing each individual transaction, the report is automatically generated to sort the expenses by category. Versus if you leave thousands of transactions uncategorized, all it's going to show you is your total expenses, which is not usually very helpful, especially if you have an imbalance between expense and income and you're trying to see, where am I spending my money? Is there somewhere that I could cut back? Having them broken down into as many categories as are useful for you is really helpful. The next task is probably something that you'll do either once a week or once a month, probably early on. It's better to do it more often. Later on, once you get into the swing of things and everything is working as it should be, maybe you can do it once a month. But that is to reconcile your bank and credit card statements with your QuickBooks. So making sure that everything went through as it was supposed to, like they didn't accidentally post your payment twice or something like that, that you would catch by going through it line by line and having to check off on your statement, because QuickBooks is really just your best approximation of what's really happening with your money. And your statements, your bank and credit card statements, is what's actually happening with your money. So you want to make sure that your QuickBooks, your estimation, is lining up with what's actually going on as far as the bank is concerned, because that's all that's ever going to matter. Also, you'll have to pay bills, aka print checks, write checks, however you're doing that, but keeping track of the received invoices for money that you owe and their terms as far as when is that money due to that vendor, and then making sure that those payments go out on time, or that you are at least aware of the terms of late payments and that you are willing to accept those terms if you do need to be late with a particular payment. For example, we have a vendor that will charge us a certain fee if we're late, and at times we've chosen to pay the $25 late charge because that is really the best option, as far as we would rather be late on that payment and be able to pay another vendor whose late charge is not nearly as kind. So those terms, making sure that everything off of the invoice gets recorded into QuickBooks, so that if you wind up in a situation like that where you're having to prioritize payments, it's all easily seeable right there in one easy list. And as long as all of these QuickBooks tasks are being performed on the regular, probably by your bookkeeper, your CFO, your chief financial officer, can easily pull reports out of QuickBooks to get your updated balance sheet, aka your assets and liabilities, any of the other financial reports that you're wanting to see either on a monthly or quarterly basis, and all of that is super straightforward, just one click to export. Next, we'll talk about automatic versus manual bill pay. And this is another one where I would give the advice, obviously do whatever works best for you, but I would give the advice about starting off with more manual bill pay so that you can keep a closer eye on exactly what's happening there, versus as you get into the swing of things, setting all of your vendors up, all of your regular payments up as EFT payments or automatically drafted payments. Just makes the bookkeeper's life so much easier and minimizes your risk of being late on a payment and charged a late fee that's really not necessary, because you would have paid it if you hadn't forgotten. So EFT makes life so much easier. Once you do begin setting your vendors up on EFT, that's where I recommend using that vendor schedule template that's in the DSD module. We'll link it here as well so that you can find that easily. But there's a row at the bottom of that document where you're tracking what day of the week your EFT payment is going to come out for each vendor. You see on that template, it's also tracking when do you order, when is the product received, and then when does the payment automatically get drafted. So this is really helpful so that you can look and say, okay, well, today's Tuesday, so I know our grocery warehouse is going to take their payment, Dr. Pepper's going to take their payment, like whoever else. And then you can look at your bank balance and say, do you think you can cover all of that? Do you think that all of that's going to go through and none of it's going to get bounced? And if not, then we need to be putting money into the account to cover all of these automatically drafted payments, because there's no way that we can stop it at that point. So a couple last points to close out this section. One, who is prioritizing which bills are going to get paid and which ones are not in the event that there is a shortage of funds inside your business? And second, where is the cash going to come from in the event that there is a shortage of cash inside your business? So this would be like having an open conversation and ongoing, working it out with your banker as far as your line of credit or refinancing and adding more money into whatever loans you've taken. Going back to whoever financed your project in the first place and letting them know the cash flow difficulties that you're having, and see if there's opportunities for additional financing. A lot of times there can be. The original investors want to make sure that you succeed. So a lot of times they are willing to help out in those first couple years where the cash flow gets really tight, where the margins are pretty small in the grocery store overall, so there can be a lot of weeks where you're barely scraping by. This can also look like knowing additional people who can help buy into your business, sell ownership shares when you need cash, those kinds of things, or take more loans from personal individuals, work out terms with them. There's lots of different ways that we had to go about getting the cash that we needed on the weeks when we were short, but it's really good to go into it having some of that in mind, and then also making close watch on your budget versus your actual spending to make sure that if you've budgeted, okay, well, this is great, we'll end up with $150,000 left to carry us into the first year so that we have that extra money to kind of do some of these, getting us through the tighter weeks, and then you blow your budget and you have no money left going into opening, then you burn through your cushion. And that happens when you don't watch close enough in your project to make sure that the spending aligns with what it's allowed to be. So all of this is really good to have in the back of your mind at the very beginning, knowing that almost certainly you will need to add cash into the business in that first year, maybe two. When it comes to your building, there are so many different options as far as what's going to be the best scenario for you. So chances are there's probably one that emerges as this is the natural path forward, especially if we're talking about a rural grocery store. A lot of times we're taking over a vacant building that already exists. And so we're in the building remodel category. We're either renting the building or we're purchasing the building, maybe doing a lease to own type situation where you're essentially renting, but the rent money is going to eventually get taken off the purchase price. To set up your utilities, this works just like it does for a private residence. You call the power company, the water, whoever it is, and give them your information and get your account set up. This is another opportunity to either pay that bill manually or set it up on auto pay, EFT. We went this route to where all the utilities are just automatically paying themselves. And within your utilities, there are some decisions to make. Internet is a great example of when do you want that turned on? Because you absolutely need it for running credit card payments once you get to that point. But if you're going to be there for 8 months remodeling your space, do you need to be paying for monthly Wi-Fi that entire time so that you have access when you go there to work on your project? Or are there a few months or maybe even most of the time before you open that you can live without Wi-Fi at the store? So that's a decision to make. Depends on, in my situation, I did a lot of my work from home unless I needed to be there for construction pieces, and construction pieces didn't take Wi-Fi. So we waited until the very end, saving that monthly expense to turn on the Wi-Fi right when we actually needed it. So we went without for a good long while. So with your utilities, just be thinking about that maybe you don't have to turn them on all at once just because you know that you're going to want them eventually. So I wanted to give a few words on the various types of ownership models that you can have within your grocery store setup. There are all kinds, especially when you go places like the Rural Grocery Summit, you see all kinds of ways that people make their grocery store work. So these are just a few of the more standard ones, and I think there are resources out there like the Rural Grocery Initiative, that office at K-State, that can help you with even more creative options if your situation is needing something like that. So LLC is probably the easiest, simplest way to set up a business that there is. It doesn't provide as much protection for the owners as if you were going to go with a corporation route, but if you have a single owner especially, an LLC can be just fine. The downside to LLC is that it is tied to the individuals who register it. So the benefit that you get with S Corp is that it allows for the selling of the shares from me as an owner to somebody else outside of the business. The S Corp is making it more its own entity, and then whoever wants to buy into it can, versus an LLC being tied to the owners who start that business. There's also some tax benefits with S Corp as far as dividends that can come out of the business and the owner working in the business and paying themselves a salary that can allow for some creative accounting to take place. And again, that's where your key partner, your accountant, your payroll specialist, your bookkeeper, these people can help you understand what is the best situation for me based on the ownership, the people who are trying to be owners in the business. The C Corp is an even higher level of personal protection for the owners. So this is another option and provides an additional structure of basically all of the income gets taxed at the corporate level, and then anything that's left gets paid as dividends to the owner, and those are taxed again as personal income. But there is a more distinct separation between the individual who owns it and the company itself. And that liability is really if the business has an issue where it were to be sued and found guilty or liable for damages, all of these are going to have different repercussions on the owners, with the C Corp providing the most solid protection between the business and your personal assets. So for example, if you own shares of this business and you own a home, in an LLC situation, there could be situations where your home is now considered part of what you can give in a settlement. It's part of your assets. It's all one thing. And I'm not saying that's guaranteed to happen, but it could, depending on how the court's found. Versus a C Corp, there is a hard wall between the business has its assets and the owners in the business have their own assets. None of those are able to be put forward into a settlement that is solely on behalf of the business. Now, if the individual owner was also found liable, that's where you're going to step into their assets as well, but that's not automatically the case if only the business is the guilty party in the lawsuit. And you can also have a cooperative. A cooperative being a nonprofit structure where any of the profits are returned back to the members of the co-op. And usually how that works is that there is a buy-in for the members. So for example, our grocery warehouse operates as a cooperative. So for us to be a store served by this warehouse, we bought in to the cooperative. Now they serve our store. And at the end of the year, at the end of their fiscal year, they issue patronage checks with all of their profits back down into all of the stores who are members of our co-op. So based on the sales, based on the order volume that you brought from the warehouse into your store, that percentage of their total volume is what your patronage check is issued for once a year. So you get that rebate, so to speak. A few partners I wanted to mention in the funding category are Network Kansas, the Small Business Development Center at a university in your state. I think there's like 30 or 35 SBDCs around the United States. So chances are there's one in your state, like in Kansas, for example, it's located at Washburn University. And this is such a cool thing. I can't hardly even believe it exists, but basically you can call them and get free assistance with your business, and they will do their best to hook you up with free resources, even going so far as to hook you up with someone at Washburn University who's maybe studying networking, for example, and they come and provide you with technical expertise on your project free of charge because they're a student. So finding good solutions as far as like how to get help with your business, especially those technical expertise pieces, without spending a ton of money or feeling like you now have to become a networking expert because that expertise is absolutely required when you're setting up a grocery store. You can outsource it, and SBDC is a great organization to help you find somebody to outsource it to. And the Rural Grocery Initiative. They exist at Kansas State University in Kansas, but I know there are similar organizations around the country. So I also know that they serve more than just Kansas. So by all means, reach out to them if you can't find a similar organization in your area. You can reach out to the Kansas State one. They work with people countrywide, but that is another great place to get hooked up with a whole network of companies and entities and organizations and partners and funding partners who specifically support the grocery industry. Insurance policies and workers' comp. So this is something that, again, you'll want to get with your insurance provider and go through all of your operations, let them know everything that you have in mind, even send them your business plan as far as them looking at, here are all of the operations that we are wanting to incorporate into this business. Can you please put together a proposal of what insurance policies make the most sense for the operations that we're talking about? And hopefully you're working with an agent, meaning they can pull from multiple different insurance providers to show you, yes, here is a property protection policy with these limits, and if you get it from company A, it's this price, and if you get it from company B, it's this price. So that can be helpful, as well as shopping the entire market and picking and choosing which insurance policies fit your budget and the functionality that you need them to provide. So here in the concepts document, I've listed a few of the standard types of policies that you may want to explore as far as general protection for your building, your business, your inventory. So because we have perishable inventory in a grocery store setting that is a lot temperature controlled, if that refrigeration fails and the temperature doesn't hold where it's supposed to, you can have your spoilage add up really fast. The standard spoilage that you experience week to week, like, I have a few yogurts that dated out, or like a couple heads of lettuce that went bad on me, like that's going to be under your deductible. So that's not really what this policy would be for. But for example, let's say your meat cooler failed and you didn't know about it until it's 60 degrees in there, which means you trash everything. You throw it all away. And if it's the meat cooler, that means thousands of dollars is going in the dumpster, all because of that refrigeration malfunction. And that most likely is above your deductible. So you would get reimbursed for that product going bad on you. It would likely impact your rates on that policy, the fact that you had to have it pay you just like any insurance policy. But it's nice to have when you have situations like that. A cybersecurity policy may be advised even if you're not technically doing online sales. Even just taking credit card payments, for example, inside your store uses Wi-Fi to run those credit card payments. So if you have any kind of a breach into your firewall and now people are pulling that data out of you running that credit card payment, you're liable for that. So that kind of cybersecurity policy could cover you even for sales done inside your store. And last but not least, we have workers' compensation. That is obviously taking care of any of the costs associated with workers injuring themselves at the job. And with this, you can have owner employees opt out, if you want, of workers' comp. So for example, I was our highest paid employee, and as an owner, I chose to opt out of workers' comp, which basically put the risk of any payments that would come from me being injured at the job, it would be back on me. And I chose to do that because at that point, as the owner, you're balancing your business expenses versus your personal expenses. And I chose that I was going to opt out of workers' comp to keep our workers' comp policy as cheap as it could possibly be. So that's something that the owner gets to decide for themselves. If you want to take yourself out of the equation and that makes your policy cheaper and you're okay with your personal insurance covering you, that's your decision to make. Basically, any other employee who's not an owner is automatically going to be covered under your workers' comp policy. And at that point, it's really in your best interest to think about some of the things like the consent to drug test form that you have people sign when they get hired. For example, we did have someone who worked in our meat department who went to the ER a couple of different times for cuts to her person. And the second time we did have a drug test performed because the injury happened at work and found that she was not in her sober state of being, and therefore our workers' comp insurance did not have to pay for the injury that she sustained at work because she was under an influence of her own making. So those kinds of protections of consent to drug test forms may not seem necessary until you think about sending an employee to the hospital, maybe multiple times, for injuries that they sustained. That is not only expensive on that injury, but it's also expensive to your workers' comp policy that you're paying for, which gets more and more expensive the more you have people hurt themselves at your business. So next we'll get into taxes and statements, starting with sales tax. So you'll see that I've come to it from the perspective of here's how Kansas state sales tax works, and a huge disclaimer right up front that if you are in a different state, that just get with your key partners, your accountant, your payroll specialist. All of them will be able to explain to you how sales tax works in your state. But in Kansas, they collect sales tax at the state level and then they pay it back to the county and the city that apply to your business. You may remember this from the technology module, but when you're setting up your POS, your point of sale system, that you will basically inform your POS provider of your sales tax rates, and they will program those into your system for you. And then if the sales tax rate in your area ever changes, you will let them know and they will change it for you so that it remains accurate and up to date. So prepay, this is varies by state to state and even business to business in some cases. So make sure you understand the exact way that your sales tax reporting works, whether you are to estimate your sales tax ahead of time and prepay that amount or a portion of that amount, or if you're strictly obligated to pay the sales tax after the sales have been made when you know exactly what the amount is going to be. You can very easily pull the sales out of your POS, and it usually shows you right underneath that how much of that money was sales tax. And that is the money that either on a daily or weekly basis that we set aside into a savings account so that that money was separate from the money that we had to operate on, since essentially it's not ours, we're just holding it for the government temporarily. So that is an option to use a savings account to catch those funds as they add up over the month. One best practice that I can recommend is basically figuring out what is your average daily sales. Granted, there will be some days that are naturally heavier than others, but what are the average daily sales, and then what would the sales tax be for that amount, and move either a portion of or all of that average sales tax amount, have it automatically transferred to that savings account for sales tax every single day. And then maybe once a week, once every other week, you're going back and pulling what was the actual sales, aka sales tax, compared to my automated transfer of the average amount, and either that was going to be too much or too little, and you transfer the right amount of money to make it exact, like I said, once a week, maybe every other week. And then it is also possible to set your sales tax savings account up with the state so that on the date that you have sales tax money due, that it's automatically going to draft that out of that savings account. That's an automated step that, again, once you're in the flow, that's a helpful thing to have turned on. But early on, it may be nice to have it more of a manual process just so you can keep closer tabs on all the moving parts. So tax filing, this would be the end of the year tax process that your business will go through, and basically what you're going to provide to your accountant will be your balance sheet and your income statement. So once they have those, they can generate everything else that needs to happen, and everything else that needs to happen is highly dependent on what type of business did you elect to set up in the first place. So the tax process for an LLC, for example, is different from the tax process from an S Corp. 1099s, though, those are specific to hiring contractor labor. So regardless of what type of business you did set up, you may need to issue 1099s if you did need to pay any contractors during that year. You'll issue K1s to all the owners if you are using an LLC or an S Corp, to show what is the impact on their personal tax return from their ownership shares in your business. And there may be others. So this is where, again, consult with your accountant, consult with your particular partners so that you know exactly what is needed for your unique business. This next section looks at payroll taxes and all of the various moving parts included in that. Again, this is where your payroll specialist is going to be your first resource as far as how they're helping you through that process. These are just some ideas to get you thinking and probably a list of questions that if you are having your first meeting with hiring your payroll specialist, this at least gives you a starting point. So unemployment tax is paid by the employer. Social Security is split between the employee as a withholding through their paycheck, and half is paid by the employer themselves. Same with the Medicare, half through withholding, half paid by employer. Federal income tax, that is purely withheld based on the employee's income and the elections that they made on the new hire paperwork that they filled out for you, aka how many dependents did they claim. Those types of things will guide what that federal and state tax withholding is. So for how often you're paying the half that you owe for Social Security, Medicare, any of the other withholdings that you do, the state level government and the IRS will determine how often you're having to pay that money in, and it's going to be a lump sum for all of the Social Security money you owe, all of the Medicare money you owe, aka it's not per employee, it's an aggregated amount based on all of your staff, and they will let you know how often you need to pay that. Again, you can reference your specific state and federal requirements, get your accountant's help on all of this, but here are a few of the other forms that you'll be submitting along with any of the other payments that are outlined above. So the quarterly 940, that's showing all of the gross wages that you paid across the board for all of your employees during that last quarter, along with the total income taxes that you have already withheld. Similar to the quarterly 940, annually you'll submit a W-3 that shows all of the gross wages and income taxes withheld for the entire year. And then also quarterly, you'll submit federal unemployment and state unemployment. And to close the loop on this entire process, each January you issue W-2s to all of your employees so that they can file their own tax returns. Note that copies need to be sent to the state and the IRS. And we'll wrap up this section by having a conversation about statements for charge accounts. First and foremost, we make a practice of granting charge accounts to organizations that are well established within the community that you are 100% sure will pay you within a month of whatever charge they're making to your business. In our POS, it is very similar to set up an account to house their tax exempt status. So we have lots of customers set up in our system where they have an account number, just so that when we enter that account number on a transaction, it'll automatically remove the tax. Because we've received their paperwork, we put that into the system, and now they have this tax exempt account number. It isn't the same thing to allow charges on that account. In our system, they are two separate things. So some employees have gotten a little bit confused in the past where it's like, yeah, they have an account so they can automatically charge. No, those are two different pieces of functionality, at least in our system, and we like it that way because we definitely use it as two separate pieces. So for any of the accounts that you have allowed to charge on a monthly basis, most likely your bookkeeper is going to go through and issue statements on those accounts. So whatever balances are being carried and need to be paid. So that can happen one of two ways. You can either print off the statement and mail it to the account holder, or you can email it to them. We opted in early on to get all of our accounts to opt in to email statements. So we're saving on postage and gas, taking it to the mailbox, and just makes it a little bit easier to get them their statements, and for sure a smaller carbon footprint. Here we'll switch gears just a little bit to talk about the pricing strategy. So right off the bat, there is something to understand between fixed costs and variable costs. And if you've taken any amount of business courses, you likely already know the difference, but I do define them here just in case. A fixed cost is a predictable amount every single week and does not change. So for example, your lease payment, your bank payment, your internet payment. These things are fixed costs where the amount is predictable. Variable costs are changing week to week and are somewhat within your control. So imagine your electric bill goes crazy in the summertime. That's a variable cost, but very little that you can do to control it. Unlike your labor spend, where that is also a variable cost, it depends on how many hours were clocked during that period, and you can intentionally decide to schedule people for less hours or eliminate positions altogether. If you realize that you need to cheapen up your expenses, that labor budget can be a good first place to look to see, are you absolutely needing every bit of labor that you're paying for, or is there some of that we could do without? Other variable costs that you can control to some extent are your cost of goods sold. So with our warehouse, for example, there is a weekly amount that we have to order in order to stay an active store and get 2 trucks a week. So beware of any minimums that exist like that. But for us, those minimums are averaged over several weeks at a time. So for example, if we decided that, hey, we're gonna order super light this week, we need to have a super light payment to our grocery warehouse just so that we can kind of catch our breath a little bit, and then we'll order more next week because we have this money coming in that can help us. So you can choose to prolong ordering groceries for a very short amount of time if all you really need is like 1 week to be able to get your feet back under you. And last but not least, marketing. So, when your sales are down or lower than what you'd like, you hate to cut your marketing budget because that's kind of cutting yourself off at the knees. But you could opt to really shift your social marketing, which would be free for the most part, into high gear and maybe lay off of other options that are more costly, like a print newspaper or radio spot or something like that. Next, we'll talk about budgetary targets. So these are more of a framework to help you evaluate the monthly and quarterly reporting that you're doing. So these budgetary targets are looking at expenses as a percentage of revenue. So for example, our cost of goods sold is 68% of our revenue, and that should be pretty much the same as what is the overall margin that you want to exist on your store. And that is probably right around 30%, maybe a little bit less than that if you're in an urban area. It depends on your business and your model and your pricing strategy and all of that. Obviously, the bigger the margin, the higher the price, the less able you are to compete with the big box store down the road. So how far down the road is the big box store is probably telling you something of how big can your margin be. If you're side by side with a big box store, having a higher price will lose business. So you have to decide and find that balance between what is the overall margin on my store. But that's basically how you can understand that cost of goods sold and then all of the rest of these. So labor, again, it's like maybe we start with a target of we want to keep labor at 10 to 12%. And as we go, we find that we are routinely overstaffed for the needs that we have in the store, or we're routinely understaffed at this rate, and we need to look at options of either, can we afford to go to 14%? What's that going to do to my ability to pay the rest of my bills? Or do I need to try to scrunch it to 8%? Or maybe we could get by at labor at 8%. And I'm seeing that we're overstaffed a lot of the time. So maybe we could shrink that down a little bit. So using the percentages kind of lets you look at that overall pie of where is all of the money going? What are all the expense categories? And then see how adjusting one is going to either take away from the other ones or give back to the other ones if that's where you need that to go. Under the fixed cost category, the percentages are a little bit harder to use in that way simply because they are fixed costs and the percentage itself is going to change week to week based on whatever the revenue was that week. And as far as setting these targets and knowing like what's realistic, because you could say, yeah, I want my cost of goods sold to be 40%, I want my labor to be 5%, and I want, those are great goals, but like how does it actually work out when the rubber meets the road. Your warehouse can likely give you some targets. Again, if you're in an urban setting, if you're in more of a rural setting, here's what some other stores your size in a similar setting have done or been able to do. And at least that gives you a starting point. And then basically, like week to week, month to month, do you have enough money to pay your bills? AKA, are these percentages, these allocations, are they working for you? And if you regularly don't have enough money to pay your bills, then you're paying too much for labor, you're paying too much for your cost of goods. There's expenses that need to be tightened up to make sense with the revenue that you're bringing in. So when we look at the percentage that we're using for cost of goods sold, that's taking the entire store and putting it all into one category. And so maybe the margin for your entire store is 30%. But when you get down into a departmental level, you may see that, okay, on my grocery, I'm willing to take 25%, but on my meat department, I need 50%. And the reason for that is I have somebody back there cutting steaks out of loins, and I have them grinding fresh hamburger every day and slicing deli meats and cheeses. So where you have a lot of labor going into those products before they get sold, the margin, that 50% margin, has to pay the labor of the meat cutter who ground the hamburger and cut the steaks and sliced the deli meats and cheeses. Same on produce. Most of your produce inventory lives in the back cooler where it's, well, maybe, depending on how you're doing this, but like a lot of times we'll have stuff that lives in the back cooler and then every day you have to fill it out front. So again, because you're pulling the rotten produce, you're filling new produce, you're tending to it every day, that may be another place where you have a higher margin because there's more labor required than just, here's a case of green beans, I put the green beans on the shelf and they live there until the customer picks them up and leaves. It could take a year, it could take 5 seconds, it doesn't matter because there's almost no labor included other than putting it on the shelf. One quick note before we move on from the departments is to say that even if you have the margin for a particular department set somewhere, doesn't mean that you won't still have items within that department where the margin is intentionally different. So one good example is, for dairy, maybe the overarching margin is 25 or 30%, but on milk, it is 5 to 10% because you intentionally want your milk price to be as competitive as it can be because that's one of those staple items. Milk, bananas, bread. Basically everybody who comes through the store is grabbing a clump of bananas, grabbing whatever milk they buy, grabbing their bread, like those staples. They are where you can be strategically cost competitive to maintain these margins. There may be regular checks that need to happen to keep an eye on the costs that are regularly fluctuating. So the couple of departments that come to mind here are produce and meat. Especially these last couple years, meat prices have been all over the place. They go up, they come down, they go back up. You just don't know. So unless you're looking at the invoice of what you're spending truck to truck to truck, you don't know what you paid for those goods. And the data feed that's coming over from your warehouse where it's automatically bringing you cost changes, that's great, but it's only happening once a week. And sometimes it's not happening for several days. If you have a truck come in the day after the data feed, then you have 6-7 more days until that cost is going to be shown in your system. Meanwhile, you may be selling that product for a price that is not high enough. So for example, when meat prices went up, we want a 50% margin, like we need to raise our price per pound quickly because our cost jumped way up. So to keep ourselves whole with a 50% margin, prices have to climb. So that is where that even like truck to truck to truck, reviewing the price paid for each of your items where they fluctuate. Again, produce, a lot of times the berries are really fluctuating time to truck to truck to truck. You could get different brands, different UPCs, different prices every single truck. The meat might be a little bit slower than that, but not by much. And always remember, if you change the price, that the price tag also needs to be changed. So like in our meat department, we rewrite it on the glass or write it on the chalkboard or whatever. And in the produce department, have to print a new tag and replace the old tag so that the new price is being shown. So next up, we'll go through the employees considerations. So first up are employee benefits. So obviously, however you decide to reward reward your employees for their service is up to you and will impact the financial picture week to week, month to month. Some benefits are more expensive than others, and based on your cash flow and how much of your budget you have to allocate to labor versus how many employees do you need, kind of tells you what is your budget for employee benefits. And so there are some, like giving your employees a discount, where technically all you're costing yourself is the margin that you would otherwise be making. So for example, on, a produce item that has a 40% margin and you give your employee a 10% discount, you're only making 30% on that produce instead of 40%, but you're not losing money. It technically doesn't cost you hard money. So that's a really affordable way to go. Other options, obviously health insurance, different policies, even if you only bring in something like AFLAC, which lets the employee themselves pick whichever benefits they want, and then it sets them up with a monthly expense that can be withheld from their paycheck. So it's 100% up to the employee, whatever policies they want to opt into, and they are technically paying for it themselves. But as the employer, you could at least offer that is available through payroll withholding. Otherwise, it's also an option to give them insurance outright, as far as like you pay for them to have an insurance policy, whether it includes eyes, dental, prescription coverage, like all of those things obviously make it more expensive. And then whether or not it applies to the employee or the employee and their spouse and children, like all of that, as far as like, do they need to pay for them to be on the policy, or does it automatically cover it? These are the benefits that are available, and it's up to the employer what their budget is for buying benefits for their employees. And another option, kind of along the discount option, is store credit. This obviously costs you a little bit more than a discount would. Next, we'll walk through the payroll process. So the new hire paperwork that you ask your employees to fill out, I would highly recommend that they bring that with them completed on the first day. You can accomplish this by emailing them the forms and having them print them off and fill them out. They could also swing by the store and pick up a paper packet and then bring it back with them on their first day. Otherwise, it may be worthwhile to give them a little bit of time at the store on that first day to fill out their forms. We also take a copy of their driver's license and their social security card just to prove that they are a US citizen and can work legally in this country. If you're hiring immigrants or people with a temporary visa status, obviously look into what are the specific payroll requirements for those individuals. Your payroll specialist is going to be your best resource on figuring out what is the exact packet of paperwork that you do need them to fill out before they start. The reason I suggest they bring it with them, or that you do it first thing, is that you cannot pay them until they fill out their paperwork. And if you have them in the store and they haven't filled out their paperwork, you're in sort of a limbo situation with your workers' comp. So like if they haven't actually been filed as a physical employee in the store and they hurt themselves on the first day, that is a workers' comp gray area where technically they're there to work, but they're not technically an employee. Chances are you will be liable, but it's going to be that much bigger of a headache because you have an employee working in the store who is not technically of employee status. So getting that in there first thing so that they don't work without their paperwork on file, just so everything is on the same page. So you'll see there's a few different templates that I use in this section as far as allowing you to take them and customize them for whatever you need within your new hire paperwork packet. But the emergency contact form is fairly standard. The direct deposit form, now if you want to tell them that direct deposit is required, typically checking accounts are totally free, so requiring them to have a checking account to work at your business is not necessarily out of line, I don't think, and it saves your bookkeeper from having to do paper checks for the maybe 1 or 2 employees that don't have a checking account where they can receive a direct deposit, because the direct deposit is going to automatically get paid to them based on the payroll specialist doing their thing. But if you have to issue paper checks, the payroll specialist is going to send back the information that you need to issue the paper paychecks that you need to send out. So to just not even offer that option is what we chose, but obviously you do what works best for you. And last but not least, the consent to drug test form, as I mentioned, is mostly coming into play if there is a workplace injury that does require more than first aid, aka within the realms of workers' comp. We do have the employee drug tested when they go to the hospital as part of the routine follow-up to treat that injury, just so we know if we're liable or not. So once you have everybody in the system and they're working their hours, now it is time for payroll. So you pull the report out of your clock in and clock out system, whether that's through your POS or you're adding hours up off of paper time cards, whatever the system is. There is a person within your business, most likely your bookkeeper, who is pulling that information together, is providing a comb through to QA/QC that data to make sure that it is accurate. So for example, if somebody accidentally didn't clock out one day and then they clocked back in the next day, so now the shift for Tuesday is 23 hours. That doesn't sound right. Yeah, it's not. So that needs to be fixed before it gets sent to the payroll specialist. They don't know. They just run it with whatever data you've given them. So make sure it's correct and that there are no errors within that data before it's sent. And then you're sending it over to your payroll processor. And if you have everything set up on direct deposit, you're basically done at that point. They will handle it from there. Unless, of course, you want to distribute pay stubs. And again, this is a place where I think you get to decide if you want to offer electronic pay stubs only, aka we will email them to the people who want them, is how we handle it, versus printing paper pay stubs for every single person every single time. Me personally, as a human, I do not look at my pay stubs, mostly because my job has always been salary. So a pay stub makes no sense to me, and I thought that made a lot of sense as far as why we would offer each employee, do you want to see your pay stub or not? And 95% of employees don't want to see it. They see the amount that shows up in their bank account, and either that's correct or not. And every great while we'll have one ask for a pay stub because this doesn't seem quite right, and then usually it's fine. There are very few employees who actually want one, and all of them that we've encountered are totally fine with electronic pay stubs. So again, that just makes the time spent as efficient as it can be for your bookkeeper, and they're not doing a lot of extra work that actually nobody cares about. So we're going to start the cash management section by talking about money security. So the first piece is storing cash in the store. So this probably looks like having a safe or multiple where you can ensure that you are doing the best, that you are securing your money to the best of your abilities, and it most likely translates to making frequent bank deposits so that you're not holding on to cash any longer than you have to, and possibly even that you're choosing to go to the bank more often to get new drawers made and have in the store, just so you're not storing any more cash than you absolutely have to. Bank account withdrawal privileges are things that is something that you might consider giving to your store manager or your bookkeeper, whoever's responsibility it is to take money out to set up new drawers. And access to petty cash. So for this reason, we actually have two safes. We have a big safe that is heavy duty, that is not liftable, basically, where we can drop bags at the end of the day, and the next day the store manager can deposit those bags into the bank. So overnight they live in the big safe. Also, while they're waiting to be loaded as new bags, they also live in the big safe. In the little safe that basically all the closing managers have access to, which is definitely more people than have access to the big safe, that's where our petty cash lives. So it's still under lock and key, but more people have access, and the safe itself is kind of comically small in terms of you could literally pick it up and carry it out of there if you really were determined to do so. So those are two different levels of security that we've opted to have inside of our store. So again, whatever makes the most sense for you. So new cash drawers, this is where you'll have a bit of a strategic decision to make as far as, do you want to load new drawers per register per day and all applicable cashiers would share that register? Or do you want each new cashier that comes on for a shift to have their own drawer? So the difference is going to be, one, how many times a day do the drawers have to be balanced? So if you're doing a new drawer for every cashier, that's a lot more time that you're going to spend balancing. But on the flip side of that, it's also giving you a way clearer picture, way more transparent look at accountability. And every single cashier is directly linked to their drawer. So if money is going missing, you know exactly whose drawer it went missing from, versus if you have 3 different people sharing a drawer all day and you know, okay, well, we're short $60, it's one of you 3. I know that at least you guys had access to do that, and maybe somebody else that, you know, at that point you kind of lose access to that traceability. The last supporting document for this module is the cash drawer setup cheat sheet. This shows an example flow of, for each day that you may go to the bank, you're going to deposit certain days worth of money, and you're going to get new bags ready for the following day or days. So this shows you what you're depositing, what you're pulling, how you're balancing, all of that. Also at the bottom, there are sections for a list of what our starting point for our bags is, and it really doesn't matter the specifics of what's on this list, but it absolutely matters that you have a standard starting point. So every new drawer that you load is filled with the exact same amount and the exact same separation of denominations within that amount. So that way you know as you balance that you're always going back to the same starting point. And then also same thing with your petty cash. So you'll see we don't really keep big bills in our petty cash. We're keeping ones, quarters. That's mainly the thing that we go into petty cash for, is to buy those. But for example, if one of the registers needs a roll of quarters, we don't just take it out of petty cash and give it to the register. We take a $10 bill out of the register and put that in petty cash, and take $10 worth of quarters, which is one roll, out of petty cash and put back in the register. Now the total dollar amount of both of them hasn't changed, and that's what we want. When it comes to making new drawers, this is where, again, you have an option. And early on, we were doing it manually, and over time, we saw how much time that really was taking. And we were wanting to explore what is an easier way, and that is where we developed our bank option, where they are essentially making our new bags for us. So for our store's example, we have 2 registers, and that means we need 2 cash register drawer bags, or new cash registers, ready to go every morning. So we take bank bags to the bank that have a withdrawal slip in it for the amount of our starting bag. So if each bag has $415 worth of change in it, that's the amount that we want to withdraw in this bag, and the amount that we want to withdraw for the second bag. And also in the bag is a change order slip where it says, out of this $415, I want $100 in 20s, I want $70 in 10s, on and on and on down the list of denominations. So they're not just giving you $415 however they feel like it, they're following your change order. And at that point, you have a bag ready to go with almost no effort on your part. You put the withdrawal slip, you put the change order, you take it to the bank, you let them do their thing. The flip side of that is that basically today's bags that you're done with, that have already been through the register and we're complete with this, we deposit the entire thing. So at that point, they count the cash that's in there, they deposit the checks that are in there, they run the change through the change counter, and we get back a deposit slip that shows us, here were the checks, here's the cash, and we have that then to balance our drawers with the cash value on the receipt showing what was deposited into the account. So we don't do much manually. We don't count the bag, we don't make our new bags, we let the bank handle all of that. Our bank does that for free, as far as like withdraw and fill it in the form of a change order. I have seen where processing change orders costs money. So like they may charge you $1.50 per change order that you want filled. And in my experience, that is still significantly cheaper than the alternative, which is the manual option, which is to say, okay, here's the bags that we're done with from today. And I want, I have $800 in this bag because we've been open for business all day. So I need to take a lot of this money out and make a deposit out of it, meanwhile leaving the $415 that we want to start with in the bag. So separating all of that out and then making sure that, okay, well, there's almost no ones in here. So now I need to take money out of here and go buy ones out of petty cash. Like our bookkeeper was spending like over an hour every day balancing the bags, making the new bags for tomorrow to do it through that manual process. So at that point, even if your bank was going to charge you $1.50 to do the change order, that's probably way less than paying your bookkeeper for however long it's taking them. So I already touched on this, but when it comes to balancing the drawers, then the first choice is what you're going to do with the bags at the end of the day, whether you're going to house that cash inside your store. Like I mentioned, we have a safe that they drop the bags in the top, and there's only a couple people with the key to get those bags back out. Or you can also get a night deposit key from your bank and just drop the bag straight into the bank so that you're not housing that money on site. Whenever it's time to balance, you'll generate your total sales report out of your POS system. And for our system, they asked us up front as they were setting it up whether we were doing registers by day or registers by cashier. And based on the selection that we made, they figured that behind the scenes so that that report that we use for balancing is showing correctly for us as totals per lane, not totals per cashier. So that report is what's showing you, okay, this many dollars in credit cards went through your lane, this many dollars in cash, this many dollars in WIC and EBT, whatever all of the different tenders that you accept, it'll show them itemized out. And then in the example where we're just depositing the entire amount, we would take that deposit slip and see, okay, well, we deposited $967 in cash, and on my report it says that we took in however much, and I add in the starting cash that I had put in the drawer, right? The $967 isn't all profit or sales. I put $415 in the drawer to start with. So I take $415, I add the amount that the report shows, and that's what my total cash should be, and I can compare that to the deposit slip that the bank did. Obviously, you'll count the cash from the drawer, and whether you're going to count it and write down the total that you have, or you've deposited it into the bank and now you have a deposit slip that you're working off of, it's basically the same difference, whatever you're more comfortable with. Our bank was very cool and provided us basically with all of the money bags that we needed. So we have a bunch of them floating around where we've written, especially over the weekend, where we get all of the bags ready for the weekend on Friday. We're preparing Saturday, Sunday, and Monday's bags that day. And so at that point, we have several registers worth of cash in the safe, and the bags are marked with Sunday lane 1, Sunday lane 2, and those are the two bags that go in there versus Saturday lane 1, Saturday lane 2. That's also helpful as far as like then at the end of Saturday lane 1, I put all of that back in the Saturday lane 1 bag, and then when it goes to the bank, they put all the paperwork back in that bag, and now I balance with a deposit slip that I pulled out of the Saturday lane 1 bag. So that keeps everything together so that then later on you can balance with the report out of the system. Unfortunately, you will likely need a process for missing money every once in a while. I think even when cashiers are well-intentioned and doing their best, you may come up short or long for some reason. This is, again, totally up to you. What is your process for managing that? If you find that there is a discrepancy inside of your balancing process, what do you do next? And for our bookkeeper, she knows to go get the schedule and look at who are the employees that were working that day. Does it look like, was it a weekend day when we only have these couple people, or was it a weekday when there's these people there? So she can at least do that bit of research, and then she turns it over to the store store manager with here's the discrepancy, here's the date that it was, and the schedule as it stood. So then the store manager can go back to those individuals and see if we can figure out why was the drawer off. Again, if you're not balancing by cashier, the traceability in a situation like that is very challenging, versus if it's one cashier's drawer, you're like, hey, Martha, where's your $60 that was short out of your drawer? Easy peasy. So again, your process for missing money is going to differ depending on how you're organizing your drawers to begin with. So at the end of the balancing procedure, we have a deposit slip, we have any record that we've made as far as counting and balancing the drawer, we have a printed POS report, and we staple all of that together and file it away. Every year we basically purge those files, but just so that we can keep it straight, mostly for that monthly QuickBooks bank statement reconciliation process. As we check off all of the deposits that we have in QuickBooks compared to the bank, then those files become less and less necessary, but we absolutely hang on to them in the short term. You can either enter that data into QuickBooks, or remember, if you have your bank account feeding back into QuickBooks automatically, that next time that data process runs, that those deposits are going to come back, and at that point they just need to be categorized that those were the cash deposits from your cash registers. You probably have a whole category that's just for that. So this whole balancing process that we've talked about so far is very much is centered on your cash. The credit card payments that you're doing, which are probably most of the money that you have running through your store, they are automatically being deposited into your bank account. So we don't balance those as far as like every single day when we're printing off POS reports, but about once a week, once every other week, we do go back through and pull a POS number of what should the credit card deposits be, and then we compare that to what actually got deposited in the bank account. And I would say maybe once in 4 years have we ever had an issue between the two. But again, just to make sure, I feel like that's most of what we're doing in the financial process, is just crossing our T's and dotting our I's. So why not be covered and make sure? And last but not least, community donations. So again, a strategic decision as far as how you want to handle these. We have our store manager approving community donations. So we have empowered him with somewhat of an annual budget, or at least a loose target of, we want to see donations falling in this range. And from there, it's up to him to digest all of the donation requests that we receive at the store and come up with the best approach to fill as many of them as we possibly can. To that end, though, we reserve the right to be creative in how we choose to make donations. So there could be options as far as, I would say most people who come in asking for a donation are wanting cash. They want you to get out your checkbook and give them some money. We basically never do that for lots of reasons that are very personal, and it's kind of up to you what you want to do, but it goes back to the margin that you have on your food product. So what we normally do is offer them $50 worth of groceries to go towards their event. Do you need bottled water for your 5K? Can we donate that? Can we donate that and a couple cases of bananas instead of $50? Will you take that? And a lot of them, 99.9% of them, absolutely will, because they're going to take your dollars and they're going to buy stuff. So if you can donate product, remember, you only paid 68% of retail for that item. So donating $50 worth of product, you're actually only spending about $35 to make that $50 donation. So it's definitely in the store's best interest if you can donate food instead of cash wherever possible. I do recommend having one person or only a couple people who are responsible for the donation requests, simply for tracking purposes, simply so that you have one person who's kind of minding what we're doing in terms of that budget. You may be able to work it out to where maybe you're able to run those donations through your register, or create a charge account, or like some suspended receipts that are able to show here are all of the donations that have been made. But really, I think it's easiest when you just have one person in charge of running that entire process. And when you make donations, don't hesitate to ask if you can have your name on things or if they have place to hang up a sign that you might provide. For example, we had a banner printed that's super simple. It has our logo, our phone number, and our address, and thank you for shopping local. It's a 3x5 banner that basically when we donate to an event, we ask them, will you hang this up? And every single time they say yes. And then when their event is over, they bring the banner back and then we give it to the next guy. So when you make a donation, you are supporting that event. And I believe you have the right to ask for your advertising to be part of the event. A lot of donation requests will even say things like, if you donate at least $50, we'll put your name on the back of the t-shirt. So when it was my job to evaluate the donation requests, those are the kinds of things that I look at. Is like, what is the value of the donation compared to what is the cause, what is the impact that that donation allows that organization to have, and what is the advertising exposure from the business? I mean, we are in a for-profit business situation here. So what is the advertising exposure? So basically, like apples to apples, if I have two $50 donation requests and one has a t-shirt they want to put my name on and the other one has no advertising opportunities, if I had to choose between the two of them, I would choose the one where my name's going to be on the t-shirt, because those t-shirts get worn around and now my name's on the back for the rest of time. That's advertising exposure for a really long time. So that $50, there's a lot of bang for your buck. Now that doesn't mean that the other group, maybe they're doing something super incredible with the donation that doesn't include advertising opportunity, but is maybe a community benefit, or they can hang up your sign or something like that. I think when you're making donations, it always pays to be looking at not only satisfying what they're asking for in terms of support and help with whatever event they're doing, but also what's in the best interest of your business. Thank you so much for joining me for this grocery module. If you have any questions at all, my contact information can be found down below. I would be happy to hear from you and help in whatever way I can. Another big thank you to my partner on this training series, the North Central Regional Planning Commission, for making this possible. And until next time, you take good care, and thank you for listening.